March 11, 2026. The world just crossed the point of no return. As kinetic friction intensifies in the Middle East, the global financial compass is spinning out of control. Gold hasn't just risen, just shattered $5,200 an ounce, the highest price in human history. Meanwhile, energy markets are behaving like a cardiac monitor in a crisis. One moment, oil spikes to record highs, the next, it's a sea of red. Most people are watching the headlines, but the smart money, they are watching the exits. Today, I'm revealing the invisible survival strategy the 1% are using to weather this 2026 storm. We're now in the second week of direct regional escalation. But the real threat isn't just the missiles, it's the geography. The Strait of Hormuz, a narrow strip of water where 20% of the world's daily oil pulse flows. If this pulse stops, the global economy goes into cardiac arrest. Coupled with the ongoing friction in Eastern Europe, we're seeing a double flashpoint scenario. When the world's energy supply is held hostage, capital doesn't just walk away, it runs for cover. And that is exactly why the gold market just went parabolic. Gold is doing what it has done for 5,000 years. Acting as the world's emergency exit. You can print paper currency. You can manipulate digital ledger interest rates. But you cannot manifest physical gold out of thin air. Central banks knew this day was coming. They've been quietly vacuuming up reserve for years. Now, the rest of the world is finally catching up. But here is the question that matters. Will the giants hedge their bets? What are you doing to protect your family's purchasing power? Preparation isn't panic, it's math. Here is the blueprint for financial resilience in this new era. Step 1. Hard assets. Gold and silver aren't investments right now, they are insurance. In a world of weakening fiat, physical weight is your only neutral ground. Step 2. Tactical liquidity. In a crisis, access is power. Maintain 6 to 12 months of emergency reserves. Not just in a bank, but in highly liquid, short-term instruments you can touch. Because when the banks slow down, cash is the only language that talks. Step 3. Debt leveraging. Credit card debt at 20% interest is a financial debt trap in an unstable economy. Kill the debt before the debt kills your options. Step 4. Tangible preparedness. This isn't about bunkers. It's about 90 days of essentials. Food, medical supplies, and energy backup. If the green flickers, you don't want to be in a line at the supermarket. Step 5. Strategic diversification. Move beyond traditional paper. Look at commodities, energy infrastructure, and a small percentage in decentralized assets like Bitcoin as a speculative hedge against the old system. But remember, the best case scenario is still possible, and you need to be ready. The worst case, a prolonged blockade that sends oil to $200 and triggers a global inflationary spiral. The best case, diplomacy wins, tensions cool, and markets stabilize. But in either scenario, the era of easy money is over. Financial resilience is no longer optional, it is a requirement for survival in 2026. History teaches us that financial shifts build slowly quietly until the day they happen all at once. Whether this conflict escalates or fades, the world has already changed. Preparation beats panic every single time. Don't wait for the headline to tell you it's too late. If you value this level of analysis, join our community of prepared investors. Hit subscribe and tell me in the comments, what is the one asset you trust when the world goes dark? Stay sovereign. I'll see you in the next one.